Hey, hi everyone. Welcome to StockSageAI. In this video, we are going to talk about the portfolio health feature on our platform. You can access the portfolio health feature from this button in the navigation panel. Now, if you look at the dashboard, we have three major tabs in the portfolio health feature. One is the health analysis, the other is risk adjusted metrics, and then there is a smart value scoring system. So, what is really portfolio health score? What we really do is we evaluate the portfolio which we have created on the basis of four major components. And these components are diversification, volatility, concentration, and correlation. The idea behind having a portfolio health score is that a lot of times we create portfolio on the basis of our gut feelings without doing any deep analysis, and we overlook certain aspects in terms of the risk which we are building in our portfolio, and that risk can be attributed to any of these four components. It could be whether a portfolio is diversified or not, whether the portfolio consists of very high volatile stocks, or does it have stable stocks. How is the concentration of our portfolio in terms of the weightage? Are we kind of buying a lot of stocks, but less in numbers, but more in quantity? Like, I only buy four stocks, but three of them are having 80% of my portfolio, 90% of my portfolio. And then the correlation. Are the stocks correlated to each other in terms of the performance, and are they from same sectors and likewise? So let's look at this example. We already have a portfolio created in the platform, and we're getting a risk score of 12.2 out of 100. And this scoring has been done on the basis of these four components, which I just discussed. The system gives us certain recommendations on how to improve these components, and we can go through those and use these actionable insights for the improvement. So if we look what do each of these components or analysis provide us in detail, we get the sector allocation, like which sectors are having what kind of allocation in our portfolio, and what is the AI recommending. So if you actually understand the background, AI does a lot of logic and deep analysis in terms of how these sectors are faring over a certain period of time. How have they done in past? What do they think on the basis of data? What sectors would be doing how much in terms of the performance or return, and what is a reasonable allocation that should be done to a sector, because diversification is very important, which a lot of people actually overlook. So if we see in this example, just we see we have 39.6% of allocation to technology, and the AI recommends that it should only be 20%. So we are overboarded on the technology sector. Similarly, if I go to concentration, it actually figures out, is there a specific stock where we have invested too much, or are we too much concentrated in that? For example, we just added Nvidia, and if we see, we have done almost 40% allocation of our funds into one stock. So tomorrow, if there is a issue, if the stock falls, it's very high volatile, it will actually impact our portfolio a lot. The ideal figure or the percentage per stock level is 10%, which the AI recommends. So, this is something which we should look at and improve the concentration. We also have certain help mentioned over here in terms of how we can improve our concentration in the portfolio. Now, moving to the next point, which is the volatility. This is something primarily to figure out how much volatile our portfolio is. Will it give us stable returns, or is it going to have a high volatility, and that might swing the portfolio when the market moves in either of that direction or not? Let's say, to give an example, if the market corrects by 5%, is my portfolio falling by 5%, or is it falling by 20% or 15%? If it is this case, then the portfolio is pretty highly volatile. If it is not that much impacted, it means our portfolio is pretty stable. So you have to actually see how we are covered on this aspect. We can look at stock volatility, we have the volatility numbers and the beta numbers per sector and the weightage and the risk level included for the stocks. This graph provides that information. Then we have um, sector wise volatility, and on the basis of that we can see, are we invested too much in certain sectors which are very highly volatile. We can also look at the stock beta analysis, which is primarily how a stock moves in relation to the overall market. Um, on the basis of those sectors, it is mentioned over here how these stocks are going to perform. So the market beta should be one. If we are below one, we are pretty good. If we are below, if we are higher than one, the stock is pretty highly volatile. Volatility risk breakdown. This will club all the risk categories together and look at the stock count in that specific risk category and the overall portfolio weightage of your of those stocks in your portfolio. So that gives you a pretty good picture. For the help on how to improve these numbers, you always have the help mentioned over here, how we can improve the specific attribute in the portfolio. Moving to the next tab, which is correlation. This provides you info in terms of how are these stocks correlated to each other. Is there a very high correlation? Then that would be mentioned over here. The system would give you the data. If we see, we are almost around 0.35%, which is moderate correlation. We don't have an issue on that side. It would have been great if we would been in the green zone, which is 0 to 0.3, to have a low correlation amongst the stocks. So this is all about the health analysis. Now moving to the next tab, which is risk adjusted matrix. So risk adjusted matrix, what it does is that it will give you an overview of how much are you investing in your portfolio in certain stocks, which might give you risk free returns. And when I say risk free returns, so there are two aspects to it. One is there could be certain stocks which are pretty stable and will give you positive returns without risking too much, and they might have a high or low impact on your portfolio. That is something which this panel showcases at a stock level, how the top and bottom performers are in your current portfolio. This data is calculated basis on four different parameters, which is Sharpe ratio, Sortino ratio, maximum drawdown, and performance attribution. And using these, the AI comes up with the overall KPI where you are positioned on your portfolio with respect to the risk. So if we actually over here, we're kind of over here, which is pretty reasonable, in terms of the overall risk-free rate. We are somewhere around that only. So from a risk side, we are pretty much covered. But obviously, when the risk is not that high, the returns would be a bit lower, or they might be moderate. So you have to see. But then you have to see the flip side as well. The maximum drawdown is also very limited here. If you are getting 10.5% total return and the annualized return is just 4.28%, the maximum drawdown we can have, or the maximum loss we can have in this portfolio, is not more than 18-19%. So we have to see the portfolio from this optics as well. Now moving to the next tab, which is the return attribution. Now, return attribution would give you a view on how each stock is contributing to the overall portfolio return. There could be certain stocks which might be, let's say, we have a weightage of 10% or 12%, and they are giving a overall return or a contribution return of somewhere around 20%, 25%. Let's take this example. If we look at Axis Bank, the overall weightage of this stock in our portfolio is 14.5, but the return which we are giving or getting from this stock specifically is 23%, and 3.3% is the overall contribution to the portfolio return, and the attribution is 31.56%. The same thing can be measured from a sector perspective as well, that we are uh, covered how much in each sector, how much weightage is there, how much return we are getting from each sector, and how much contribution we are getting at that level, and how many stocks are part of it. Moving to the drawdown analysis. This is something which showcases, like I mentioned earlier, that in case the market falls, or there is a downtrend in the market or in a specific sector due to whatever reason, it could be cyclical or it could be news driven, how much would your portfolio fall down, right, in terms of the percentage, and how much time period it is going to remain over there, and what is the recovery duration, that in what time will it recover. Okay, so this specific tab will give that view to you. Moving to the next tab, which is risk matrix. This is having two specific KPIs, the Sharpie ratio and the Sortino ratio, which is again looking at the return we are getting per unit of risk, and Sortino is going to be your downside risk measurement. So if we are in red, this is kind of below average. The annualized returns are also around 4.28%. We are going to get below average risk adjusted returns in this case. Had we be in the green area, more than 1.5, we would have got pretty good risk adjusted returns. Same thing on the Sortino side. In on this KPI, the Sortino should normally be higher than Sharpie, which is in this case, but this still is in the red area. It's not in the green zone. So a higher difference would have been better for us over here. Um, so this is basis the stocks we have chosen in our current portfolio. Now let's move to the next tab, which is Smart Value Score. So here what we have done is we have built a scoring system on again four different components, which is valuation of the stocks, quality of the stocks, the dividend the company gives for those stocks, and the growth prospects of those stocks. Now, on the basis of these numbers, we get an overall portfolio value score. So this number is 63 at this point of time, which is a fair value out of 100. So we have a reasonable investment with balanced value metrics as per the system. There is a value opportunity of 41.1% in your portfolio, which is kind of appearing undervalued. We have certain recommendations, actionable insights by the AI system on how we can improve this. So we might be having limited exposure. We can increase the exposure to a sector. We might be heavy weighted on a specific sector that is probably underperforming. We might want to kind of move away from that sector and balance or rebalance our portfolio, trim certain positions, add new positions, and likewise. So from a value assessment perspective, if you see this graph and the table will give you a view of which stocks are where in terms of value, whether they are undervalued, overvalued, fairly valued, or moderately valued. So that data is available with you for your analysis. You can look into this. For example, we have 41.5% of significantly overvalued stocks, which we can deep dive and maybe trim certain positions or rebalance them against the existing stocks or new stocks. We also have a sectoral analysis from a overall benchmark perspective in terms of the stocks we have today. How is the PE ratio, average return on investment, and the cycle position at this point of time for that sector. Moving to the next tab, which is the individual stock score. This is going to give you a view of each stock and how it is calculated in terms of the fair value. That data is going to be mentioned over here for each stock. So like for Axis Bank, it is giving a 60.6 value. So let me choose, let's say, Bajaj Finance, and it will give me a 51.6 as the average value. So this stock is significantly overvalued and has a negative upside potential. So I might want to trim my position over here. Okay, I can even look at each of these valuation score components on how they are being calculated, how the numbers stand, what are benchmark numbers, and what is the overall score I'm getting for each of these stocks. And likewise, and we have a recommendation that what is the issue in the stock, and the system provides you that. Let me go and LNT. Yeah, so if you see, this is a significantly undervalued stock. The recommendations are that this is a strong growth metrics stock with good potential future earnings. We can see there is an upside potential of 57.6%. And if we want, maybe we can rebalance our portfolio and look at LNT for more investment. Moving to the next tab, which is value opportunities. So currently, if we see in, let's say we have 10, 12 stocks, where do we think we can probably invest more? I can actually scan within my portfolio. Like for example, if we remember in the last tab, LNT was having a good score and there was a good upside potential. The system already tells me that these are the two stocks which you already have in your portfolio, and you can invest more in these stocks. So if certain rebalancing is required, you can actually use these stocks for rebalancing. If you want to trim a position somewhere else in your portfolio in a certain stock, maybe you can add that amount over here. Okay. If I want to look above and beyond the stocks which are not in my portfolio, I can choose the option of include external stocks. So let me select this, and the system will do a certain scan on that and come back to us with the smart value score of the other stocks we have in our system, and provide us the opportunity that you can go and review these stocks. If you think this looks good as per your view in terms of whether you want to invest in this sector, whether you want to invest in the stock, it makes sense to you, those stocks can be the candidates where we can invest more. This scan will take a certain amount of time because numbers keep on changing on daily basis for each stock, and the system does it against your specific portfolio. So it will try to bring certain stocks which will be more aligned to how your portfolio is built, and on the basis of that it will provide you more opportunities which can help you increase the overall smart value score as well. So if I see over here, you can look at a stock Whipple Limited, which has the upside potential of 3174%. Then we have Reddington, Indus, Wipro, and a couple of other stocks. So we can choose those stocks and build our portfolio. I can also filter or increase or decrease the minimum smart value score for these stocks, and it can provide me only those number of stocks. So because this list is pretty large, if I want to further filter it down, I can again play around with this and get a shorter list. Once we have the data, then probably we'll move to the next tab because the system is still working on it. So it will take a couple of seconds over here. Okay, so we have the data now. You can see the list of stocks which we have. Now this list is shorter as compared to the earlier list we had, but it will have similar or specific stocks. So I can see Reddington. I can't see Whipple Limited. Probably it has removed it basis the smart value score it had. And Happiest Mind is there, Zaggle is there, and a couple of other companies. So now coming to the next tab, which is a very important feature called sector analysis. So let me go to the historical performance first to give you certain context. So one thing we as investors normally overlook is that every sector has a specific cycle and it operates in cycle. And that is evident from the data which we have collected for past 10 years. And the AI has been able to pan it out and showcase the patterns which are there for each sector over a period of time. If I quickly pick one sector, let's say I'm picking healthcare over here. In 2015, the healthcare gave a return of negative 28.5%, and then it gave 26%, 16, 11, this, and likewise. Now, after almost like 7 years, 8 years, it again gave a similar kind of negative return. And then next year, it was a positive return, even though the numbers are a bit apart, 18.6 compared to 26.1. But if we actually see this, there is a pattern to every sector how it is performing. Now, this could be attributed to various reasons. It could be certain news, it could be certain government policies, it could be other factors contributing to the sector, how it has evolved, whether technology is coming, helping it out, and there could be so many things. But if we look at the data holistically, we see that there are patterns within each sector and how these sectors perform. Now, what we have really done is using the AI, We have figured out where do we stand today for each sector in terms of whether it is an early cycle, mid cycle, late cycle, or whether we are kind of in a recession phase. And on the basis of that, what the market cycle is, we have tried to figure out how your portfolio is aligned to it. So if I go back to the market cycle, so we are currently in the late market cycle, and our portfolio, which we have in this platform, is misaligned with the current cycle. Why? Because if I look at the exposure, we have an exposure of 17.5% in defensive, 42% is cyclical, growth sector is only 0.8%, and then the value sector is 48%. The systems lets us know that where you have gone wrong and how you can improve for the next cycle. So the next market cycle, it says it's going to be a recession, and it's estimated in 9 months. We are not positioned for the next cycle properly. The expectation is mentioned over here. It gives us the rebalancing opportunities, that where do we need to reduce our exposure in what sectors, and where do we need to increase the exposure. And on the basis of that, it projects that you can get a positive return. The portfolio positioning is mentioned. We are already in the red phase in terms of the current cycle we have. And this is the portfolio sector exposure, where we are aligned with the current, aligned with the next. So we are better aligned with the current portfolio at 26.4%, and poorly aligned with the next cycle. And this is what it's mentioning over here as well. And the categories where we have invested, which is defensive, cyclical, and other categories. So this is something which we need to kind of look as investors, because a lot of people I know don't even they don't understand what is a market cycle or a sectoral cycle. And it's primarily because of lack of knowledge, but as well as there are no systems which are providing them this information. Okay. And then how do we kind of correct it? So if we go to the portfolio allocation, it showcases like where do we stand today, what is the allocation percentage, what is the benchmark percentage, and how we are today. Like I'm plus 19% positive, or there is a higher percentage difference as compared to what the benchmarks is. These are the overweight sectors. These are the underweight sectors. These are the recommendations which the AI portfolio provides, and how we can improve it. So this is something which we should kind of introspect. When we do the health analysis, look at the risk-adjusted metrics, and look at the smart value score of our portfolio, and then take a call on how do we want to rebalance all of these. Take a guidance from the recommendations given by the AI system, understand them, and then make informed investment decisions, which can help you in increasing your returns in the coming period. That's it from my side for the portfolio health feature. Thank you so much.